What's happening, Bulls? Hope you're all doing well. It is just after 9 o'clock in the morning here in Melbourne. But this one came up on my phone last night from the Daily Telegraph. Investment income arrives from many sources. Not all are safe, which is a very interesting article. I'm going to go over it. This is one of the main reasons why I wrote my ebook, Money Never Sleeps, which you can get at the wallstreetbullofficial.com because it's freaking important. Go get a copy of this and let's get into it. As you can see right here, they did mention share dividends, a traditional staple for millions of investors and super fund members. Shares deliver handy dividend income, but have a high chance of your investment going backwards in the short term. This is why you need to think long term with dividend investing and cash flow and passive income. You need to think long term. Now, it's interesting they say here the past 2 months, a perfect example where capital losses on many shares wiped out much more than the income delivered over the past year. But again, this is like fear, in my opinion, because all I see is opportunity, because this is temporary. And again, they mention right here, Baker Young managed portfolio analyst Toby Grimes said that shares in Australian banks had become more attractive for income-focused investors following their recent falls. I don't invest in Australian shares because the market is just too small. Now, my favourite one here in Australia, property. Investing in real estate can deliver a decent income, especially for landlords who owned a property for many years and enjoyed rent rises. But unfortunately, what these people don't mention is the fact we in Australia have seriously high interest rates, which basically mean you're going to be tipping money in to your property investment portfolio. And all of the freaking taxes, land tax, capital gain tax, council rates, body corporate or owners corporation fees, and if you ever choose to sell it, agents fees. It just doesn't make sense to own real estate as an investment portfolio. Really, it doesn't these days. Of course, the most boring of all is bonds. Aussie invests more money into property and shares than they do in bonds. Bonds are a very conservative asset class. They really don't provide that much income, but again, they should form part of a diversified portfolio. Stay the hell away from private credit right here. All they do is give you a very low interest rate on your investment, and then they lend that out to other people who need private credit at a much higher interest rate. And I'm talking between 10 to 15%. I'm not kidding. Well, we all know cash is losing its value right now. That is why I'm buying Bitcoin and cryptocurrencies. And of course, focusing on building my dividend stock portfolio for cash flow for the future, generational wealth. And again, you can buy long-term dividend-paying stocks. The growth is going to be longer term, but again, this will provide income for your future. Go get a copy of Money Never Sleeps, the Wall Street Bull Official. Peace, guys.